What is going on, investors? Hopefully, you guys had a great week out there. I was in San Diego in the sun. Links in the description below to my Instagram and my Twitter account. I'd love to have you follow me over there if you're not already. Time for the FAANG Stock Recap Show, where every Friday we recap all the major news for all the major FAANG stocks, and we're going to kick things off like we always do with Facebook. Started the week at $377 per share, and like a lot of these FAANG stocks, we actually saw them pull back this week. So you're going to want to hang around to the end of the video when we look at the technical segments of all these stocks, because they are starting to pull back into areas where I think next week, maybe 2 weeks from now, we're going to have potentially some buying opportunities, since earnings season is just around the corner for all of these stocks. Facebook started the week at 377, ended the week at 364. You better believe, from a technical perspective, got a little bumpy there. So we'll talk about that here in a second. Now, Facebook updates its business tools after Apple updates hurts its targeted ads. Now, several weeks or months ago, Apple updated their software. And before, you used to be able to track users. So if you downloaded Facebook app, they got to see what websites you'd been to. They got to see, but they basically got to know everything about you just because you downloaded the app, and you probably weren't even aware of that. Well, Apple iOS kind of closed a lot of that. And what that does is it hurts targeted ads, because Facebook knew what websites you've been to, knew a lot about you. And so they were going to be able to serve you ads right away. Now they're not able to do that, at least on Apple devices. But this always happens in digital advertising, okay? Now, I've been involved in digital advertising for nearly 2 decades, and there's always changes. Sometimes it's iOS, sometimes it's just a browser update, sometimes it's just users' habits change. And the online advertising business always evolves. And Facebook, in my opinion, is doing an absolutely brilliant job of that, with uploading some new features, which I think they're going to be iterating on over the next months and years to come. So there's going to be a new feature where it allows you to start a conversation with a business by clicking on an ad. So for example, maybe there's a jewelry store ad, or maybe a shoe ad, and you want to click on there and see how fast they can ship them out, or maybe if they have your size, or you have some questions about the product. Now you're going to be able to click on the ad and start a chat either in Messenger, Instagram Direct, or WhatsApp. I like that. Now, the other ad that I really liked was the quote request on Messenger. So if you're an insurance agent, or maybe you're a photographer or something like that, where pricing varies based on whatever you're trying to get, whatever type of car you have, the type of photos that you need. Well, now you're going to be able to get quotes. Maybe it's a lawn service, those types of things, depending on how big your yard is, depending on how much they charge you. So there's going to be this quote request that's going to allow you to pre-select 4 to 5 questions, maybe like the type of car you have, how old you are, those types of things that qualify for you, these types of things. You're going to be able to start that conversation on Facebook. That is going to be a type of ad I'm sure you're going to see roll out here in the future. And it helps Facebook that maybe they are not going to be able to serve you as targeted ads, but maybe they serve you ads that you're more likely to click on and convert better. And me, as an online advertiser, somebody that like buys ads from Facebook and other companies like Google as well, I want you to click on them. I want you to interact with them. And I think these types of ads will definitely do that. Now, moving on to Apple, started the week at 149. Obviously, the big news with Apple, we'll talk about here in a second, was the release of their new phone, or the announcement of their new phones. The stock went sideways, basically. End of the week at $146 per share. Apple iPhone 13 showing strong demand. Pre-orders in China than the iPhone 12, which is actually pretty impressive, because the iPhone 12 was in my opinion, a more incremental upgrade from 11 to 12 than 12 to 13. We'll talk about that here in a second. But I tell you what, if the China sales for Apple iPhones are good, that means very, very, very good things for Apple come earnings season as well. So Apple earlier this week launched their iPhone 13, their Watch Series 7, also a new iPad and some other products as well. But for the most part, this is an incremental upgrade. I think if you're one of the people like me, you have last year's phone, whether it's the Pro or any of these things, you could switch the Apple 13. I think you're going to see a small amount of difference. So I don't necessarily think people like me are going to upgrade, but if you're on the Apple 11 or earlier, you probably have a higher probability of upgrading and also experiencing much, much, much greater performance upgrades as well. So we'll see what happens with those products going forward. Moving on to Amazon, start of the week at 3,480, went sideways, actually went down a little bit. It wasn't in a buying opportunity in my opinion from a technical perspective, but we went down to about $3,400 per share, but ended up about flat. We ended the week at about $3,460 per share. Now, Amazon is looking to protect its beauty market share with a big October event. So they're going to launch this October event, which is called the Holiday Beauty Haul. So what happened over the last year is, as you can imagine with this health situation, a lot of people couldn't go. Either they didn't want to, or they couldn't go out and get their normal beauty supply products. Also, it's interesting. I've been talking with hairstylists. You get your hair cut, you talk with the hairstylist. They've talked about, because, we're on Zoom, or people are on Zoom a lot, it changes the type of makeup that you want to wear. Also, when you wear a mask, women really might not have to care about how their lips look, or lipstick, or blush, or those types of things, but they're very interested in their eyebrows, in their eyes, and things like that. And so we've seen a shift in the beauty category, and obviously Amazon captured a lot of that, and they're looking to capture even more of that with a 3-week-long beauty event in October. We'll see if this gets any publicity. We'll see if this gets any traction. This is a high margin category, and a kind of one of those businesses that kind of repeats and repeats. So it'd be interesting if Amazon's able to hold its gains there. Now, Amazon Games taps Ubisoft veteran to lead its Montreal studio. Now, Amazon has been trying to break into the video game business. They obviously own Twitch. I don't know if a lot of people out there know this, but Amazon actually owns Twitch, which is an extraordinarily popular streaming video, which tends to revolve around gaming, although other things are streamed on there at the current time, but it's extraordinarily popular with gamers. And in fact, other companies like Microsoft and even YouTube to a certain extent has tried to compete with Twitch, and they just can't. Twitch just has a great product and just resonates with that consumer base. So it's natural that Amazon wants to get into the gaming business, because I think they have almost like built-in advertising funnel. Like, they could really incentivize you streaming this on Twitch, which has a lot of eyeballs and a lot of influence in the gaming world. Now, they hit a snag on their first big budget game, this Crucible game. They actually have to cancel that development, but they've got this other game called New World. It is expected to release really just actually about 2 weeks from now. So we'll see what happens, but they hired this new guy that has, developed hits like Splinter Cell and Rainbow Six Vegas. So we'll see what happens. I like that Amazon's getting into the video game business, and this is natural. If you follow like Take-Two Interactive, they make NBA 2K, and more famously, they make Grand Theft Auto. Those games are not necessarily the NBA, but Grand Theft Auto in particular is always hitting snags in terms of release dates. Same thing with Red Dead Redemption, their other very popular game. That was slated to come out, I think, during a Q4, and it got delayed basically a year. Delays happen all the time in the video game business, and having good people and having the money like Amazon does could eventually make them a very big player in that. Now, the new Amazon CEO, Andrew Jassy, has pushed back on monopoly charges and doesn't like the big tech label. He doesn't like to be compared to Apple and Facebook and Microsoft and Google, because he claims that their business is a little bit different. I think he's got a little bit of an argument there, but he's going to get lumped into them because his valuation of his company is very similar to those companies, if not higher than some of those companies as well. On the charges of monopoly, I would actually agree with the CEO. He's pointed out that the company only controls 1% of global retail. Totally agree with that. Now, if you carve that out to online retail, obviously here in the United States, Amazon is much, much higher than that. So we'll see if his lip service of that doesn't really do a whole lot, but I do agree with some of the points that he brought up. Now, Amazon brought palm, like the palm of your hand, recognition to concerts with Red Rock tie-up. This is interesting. So you buy a ticket, now you're using your phone these days, or you have to bring the physical ticket. I have season tickets for the Niners. They give you like this lanyard thing. Well, now you're going to be able to use your palm potentially. So I thought that was interesting. Could open up some other doors, okay, to get, entry into just about anything if you can use your palm. Obviously, that technology is already out there, but to tie it into ticketing would be interesting. The other thing that I hear rumors about a lot is Amazon wants to compete with Ticketmaster, wants to compete with StubHub, okay? It's one of the products that, think about that, you can buy almost anything on Amazon. One thing you can't buy, really, is a ticket to like an NFL game, a ticket to an NBA game, those types of things. And so Amazon trying to get the Sunday ticket for the NFL, buying the Thursday night game, okay? A lot of people look at the dollars and cents of just that transaction. But what it could do is it could give Amazon a way in to the ticketing business, because as I know, it's a massive, massive business over, especially particularly the NFL. And if Amazon can break into that, could be some nice revenue there as well. Now, Amazon plans to hire 125,000 employees in the United States. They're going to start you off at $18 an hour and sign-on bonus up to $3,000. Hello. I tell you what, if I was a college kid and I need a couple extra bucks, they also pay for your college over at Amazon. We announced that last week here on the show. I tell you what, it's going to be tough. Number one, for mom and pop retailer. The mom and pop retailer was already pretty much getting destroyed by Amazon, but now these moves where they are paying more, they have better benefits than likely a Target, a Walmart, maybe even potentially like a Starbucks these days. Tell you what, Amazon is going to make it tough for those other companies to compete from a labor perspective as well. DC Attorney General adds more antitrust charges against Amazon. I tell you what, so I just agreed with the Amazon CEO that they don't necessarily hold a firm monopoly, especially from a broad perspective. I think it'd be tough to bring that in front of a judge or a court or those types of things and actually have those charges stick like they have maybe in the past with a Microsoft. I think it's going to be a little difficult, but I do agree that there are some things that Amazon does that is anti-competitive, particularly with their first-party sales of the products. This is where Amazon has a deal with either a manufacturer or a wholesaler or both. They bring the products in, they actually sell them first-party. Myself, I'm called a third-party seller, so I get products wholesale and I sell them onto Amazon. I'm often competing with Amazon on price, and I tell you what, for a large percentage of the catalog of products I have access to, Amazon's selling them on Amazon.com for about the same price or less, even less than I can get them wholesale. So it's sometimes frustrating as a third-party seller that Amazon is able to either sell these products at a loss or have so much buying power that they're getting these wholesalers to sell them products for less and then charging me more. That's what this suit has to do with, and I actually agree with this. And even though I'm an Amazon shareholder, I actually hope they lose that lawsuit because it might help me out personally in some other businesses that I run. Moving on to Netflix, started the week at $5.93, ended the week at $5.90. From a technical perspective, we'll talk about that here in a second. Not a lot of news out of Netflix this week. Moving on to Google, started the week at 2,840, slid again this week. Okay, have we broken our trend with Google? Is this thing going to flatten out? Is it going to go down? We'll talk about that from a technical perspective, and the week at $2,816 per share. Google has fined $177 million, which is to you and I like $177, to be honest with you, for antitrust violations in South Korea as that crackdown continues. This had to do with the Android mobile operating systems. We're just going to see this, that they're going to get involved in these antitrust things. They're likely going to lose a lot of the times, but when they lose, we're talking about $177 million. They're going to have to make some changes. I don't think it's going to have any impact, number one, on the company from a financial perspective. Certainly $177 million is not even, it's not even a rounding error when you have these types of revenues, but it also, competitors can't compete with Android operating system, period. So they have a competitive advantage there no matter what the governments try to do. Moving on to Microsoft, one of the few stocks that actually ended up this week, and we'll talk about why here in a second, started at 297, ended at 299, we'll call it 300. Here's the big reason, and pat yourself on the back if you've owned Microsoft for a while, because you just got an 11% raise this week. When's the last time your boss gave you 11% raise? Microsoft just did it for you. We boosted the dividend by 11%, set new $60 billion buyback. This is the kind of stuff that gets me excited as a buy and hold investor. The company's dividend is now 62 cents per share. It was 56 cents before. That is an 11% boost. So boy, that is powerful. This is why we like to invest here on the channel. We don't talk a lot about micro cap companies. We sure as heck don't talk about penny stocks. We don't talk about stocks that are kind of fledgling and those types of things. Microsoft is going to give you 11% raise on your dividend if you compound that over a long period of time. And guess what? Next year, Microsoft's going to raise the dividend again, and they're going to do it again and again and again, and they're going to buy back the shares. This is just great news for you as a shareholder. Not only that, Microsoft's profitability is better than probably, I would guess off the top of my head, 95% of the stocks in the market, and their growth rate is probably in the top 10% of the stocks, certainly mega cap stocks as well. This is why you want to build your portfolio around these types of stocks and just play around in the small cap stuff for fun, but make it a very, very small portion of your portfolio. If you have $10,000 in your Robinhood account and $9,000 isn't locked up into mega cap stocks, I think you're doing it wrong. That's just my opinion. Moving on to Tesla, start of the week at $727, end of the week at $760. I ordered another Tesla. I know I've said that like 2 weeks in a row. I ordered a Model 3 last week, and then I was in San Diego. I went to the Tesla store. I had to talk to some things about my account, wanted to see if they could give me some updates, those types of things. I saw the Model Y. I had to get one of those too. So I got one of those too. My Mercedes might be on its way out. So we'll see what happens there. Tesla forecasted to see 1.3 million deliveries in 2022 as the green tidal wave recharges. So this year, it looks like Tesla's going to do 900,000 deliveries. Analysts are already thinking that next year they'll do 1.3 million. And I just believe it, okay? I just think this company has a lot of momentum behind them, and I think they've got a lot of things going for them. And I just think they have a huge competitive advantage, or their supercharger network, their autonomous driving, the data that they have a huge competitive advantage over Ford, GM, Mercedes, Audi, BMW. All these companies are light years behind them, and I don't think that's going to change anytime soon. Cathie Wood repeats 500,000 Bitcoin call. We'll see if that comes true. And her long-term deflationary trend, that we won't need to get into a discussion there, but I agree with her there. And she explains her Tesla sale. So this last week, I noticed even this week, this news story probably doesn't include, she sold about a little over 180,000 shares of Tesla over the last week, and she calls it a quote-unquote tactical move. Now, the Cathie Wood defenders will say, well, she can't own more than 10% of Tesla in her ETFs, and that is not true. She can own up to 30%. She writes the bylaws, not the SEC on these types of things. She changed the bylaws of the ARK fund. She can own as much as 30% weight of Tesla if she wants to. Does she want to keep it under 10 or around 10? Yeah, maybe so. But you have to think about these things as yourself as an investor. I think Tesla's got such a large moat. We'll look at Tesla from a technical perspective here in a second. I think technically it's setting up maybe the best out of all these FAANG stocks, and she's selling it for a quote tactical move. So in my opinion, can you own some ARK funds? Yeah. Can you just invest in the stocks yourself? I think that, in my opinion, is probably a better move. There's nothing that Cathie Wood knows or does that's any better than any of you watching this. And that's the goal here of the Investor Channel, is to convince you and to help you learn enough so you have the belief in yourself that you're as good and probably better than Cathie Wood is at investing. And I mean this. Every single one of you watching are as good or better than her. You just need to get the right strategies, the right discipline, and the right mindset. And I tell you what, your performance can be as good or better than hers for the rest of your life. And I think you're on a great path to get that done. Moving over to the technical section of the show, kick things off like we always do with Facebook. Notice here we have broken trend on this one. Now, I leave these lines in. I don't move them until we actually talk about it here live on the show. What I think you might be able to do, this uptrend has been really steep, and then you see we've broken it here recently. Well, I think what could potentially happen is we just move this line down, okay? And we're hitting it on here. Now, from a technical perspective, have we broken trend a little bit? Yes, but that happens a lot on uptrends, okay? Stocks just don't go straight up in an arrow like a high-rise building or something like that, okay? They will take breathers. They will pull back a little bit. What you're looking for with Facebook is a pullback to about $350 per share. You pull back to $350, that's an area where, number one, it can be a buying opportunity. Number two, it's an area where you monitor, because if you break $350, that basically takes out these lows here. Take out $350 on Facebook, and yeah, we're coming down, and we're probably coming down pretty quick. Again, we're on the probably about 30 days away from earnings from these companies, and so I'll let you decide if you want to jump in ahead of that or what you want to do. I like Facebook. If we pull down to $350, I might suggest buying it. Right now, I'm just monitoring this as we head into next week. Now, Apple, completely different story. Apple can be potentially a buy on heading into Monday. We've talked about this here on the show. Okay, we broke above the 145 level with Apple. We hit our heads multiple times on this 150 area. In fact, we did that for many weeks, maybe even close to a month. We went from 145 to 150, just a tight range. Then we broke out. We broke out nicely all the way up to about $157 per share. We were actually anticipating that. We were anticipating a break here. Now, what we've also talked about, one of the things that happened is the Apple lawsuit didn't necessarily, at least the main part of that lawsuit, they won a large part of that lawsuit, but the main one, they didn't happen to win. That put a big red candle on the stock and technically broke it down a little bit. We broke below 150. Once you broke below 150, touching 145 came a high probability, and that's exactly what we saw this week. We're sitting right at 145, but this doesn't make me concerned at all, because when we pull up the chart of Microsoft, we'll see a same thing. When we look at Facebook, when this thing initially ran, it broke above its highs, just like Apple. It retested them, then went all the way up to 330, and then had a 10% retracement all the way back to 300, and then we went from 300 in May all the way up to 385. Like in 4 months, okay? Similar thing I think could potentially happen with Apple is we broke above, pulled back, retested, shook out some loose hands, and my opinion, and I might do this, not 100% sure yet. I'll wait to see what happens. I'll think about it over the weekend. I'll see what happens on Mondays. But 145, my opinion, anywhere, 145, even 146 on Apple, my opinion, strong buying opportunity heading into next week. Amazon, not a lot to see here, okay? We're consolidating right at a very, very logical spot, right at about $3,500 per share, give or take, $20, $30 on this one. You got a $3,000 stock, you give or take, $30, $40 on this one. But these were the previous highs over the last year. This stock actually consolidated between about 2,900 up to this 3,500 level. We broke above 35 and then we broke all the way down. We talked about how this was a buying opportunity under 3,300. We actually took advantage of that here on the show. And now here we are at 35 and we're waiting for this to go one way or another. We break about above this, and I think you got really high probability of at least retesting 36, maybe even 37 on this one. You break down here at $3,500 per share. I think you can retest 3,300 on this one as well. That could create buying opportunities for Amazon. Netflix looking good to me. This thing is holding up above here, up in this 590 range. You're looking for it to continue to hold up there and maybe potentially continue its uptrend. We could backtest all the way back down here to 560 on Netflix. You backtest to 560, I think you got a buying opportunity for Netflix. Google, it's gone sideways, okay, over the last week or so, but we've seen over this mega uptrend that's been intact since like last October. I mean, it's unbelievable. This stock has just been blowing up. You got to expect this thing to take a breather at some point. In fact, I think it would be healthy if you're trying to accumulate this stock for it to actually take a breath here at some point. And I think from a valuation perspective as well, you got to expect this thing to take a breath. It is clearly, it is absolutely stone cold still in an uptrend. But if any reason you get a pullback to 2,700 on this one, could create a buying opportunity, in my opinion, for a Google. But by all means, this thing is still in an uptrend and it is still moving. Similar thing going on with Microsoft that we've got here, kind of flagging out, just kind of sideways consolidating. I'm actually expecting that at some point, and it could be the next 25, 30 days as we head into earnings with these companies. We actually see the channels begin, okay? Because, as we head into earnings, people might, they might not want to really sell this stock. They might not want to really buy that. So you get these sideways channels that develop. And again, when this FAANG stock recap show started, these stocks sideways consolidated pretty much for the entire length of the show. It's just more recently that they've broken out. I would expect them to sideways consolidate again. And that sideways consolidation could last a long time. In fact, we're still in that sideways consolidation with Amazon, okay? And so sideways consolidation can last a long time. And I know it's frustrating. S&P 500 is likely outperforming Amazon over the last year, and most of these FAANG stocks are probably outperforming Amazon. But this is a great accumulation period, especially if you believe in these companies long term. And again, with Microsoft, with a company that pays a dividend, you're getting 11% raise on your dividend, $60 billion buyback. Those types of things are obviously excellent for you as a shareholder. Tesla, same thing, kind of in a holding pattern. We're right here at 750. This is why I disagree with Cathie Wood selling this stock, because from a technical perspective, can it hit its head here at 750, 760, about where the stock is right now? Sure, it can hit its head and pull back. But if it breaks above this 750, 760 level, man, this stock can run hard. It can easily get to 8. In fact, I would expect it to get to 8, and I'm expecting this stock to get to 8. I'm expecting it to get to 850 and potentially retest $900 on this one. And you're selling it? It just doesn't make any sense, in my opinion. Now, maybe from her perspective, she's got her own agenda that she has to do. She has to show performance. You, the individual shareholder, can wait and can wait things out and don't have to play things perfectly from a tax perspective or from a regulatory perspective. You can hold Tesla. In my opinion, this would be a hold. And even if you want to step in here, buy at 750 because you think this momentum is going to get higher, I don't mind that either. I think we had opportunities to do that a little bit sooner, but I think Tesla held up this week in a down week for the market. I think that's good news for it heading into next week. And I just think from a financial, this is speaking just from an anecdotal perspective, I owned 0 Teslas this time last year. Now I've got a Model 3 coming likely in December. I got a Model Y coming in March, and I've got a Cybertruck on order. Whenever they make that, I'll take that too. Okay. It just is starting to make a lot of sense, in my opinion, especially if you live out here in California, you got solar on your roof, those types of things. I'm actually going to save money. The Model 3 and the Model Y is going to be cheaper than the one Mercedes that I own. From a payment perspective, and certainly if you throw in gas and those types of things and depreciation, it'll be cheaper to actually own. So I'll go from 1 car to 2 cars and I'll actually save money. It just makes financial sense. And I think it's just a tailwind for Tesla. All the other car makers are still in virtually like concept stage with their EVs. Okay, let's be real. A lot of these other EVs are simply in concept stage. None of them are in mass production stage. And Tesla is already on their 3rd or 4th vehicle in terms of mass production. I'm probably speaking to the choir. And hopefully you guys had a great week out there. Again, I have links in the description below, my Twitter, my Instagram. I'd love to see you over there and follow me. If I don't follow you back, just send me a message. Send me tweet me, mention me or something. Tell me to follow you. I'll be happy to do that as well. I'd love to see you over there. Thank you for tuning in this week. We'll see you again soon. The videos here on the Investor Channel will pick up tremendously over the next week and 2 weeks and 4 weeks ahead as we move into earnings season. You're going to be tired of hearing my voice over the next month as we move into earnings season, but I'm excited to bring all of that to you here on the channel. Hopefully you guys have a great week out there. We'll be back again soon. Good luck with your investments.